So we are starting to see two different types of instant funding accounts in the industry. A cheap instant funding, and I mean incredibly cheap, and we're starting to see a more expensive model. Now the question is, which one is better? Are any of these scams, or any of these even worth it? I think in 2025, these are going to become the most pivotal, the most popular types of models of accounts. And so let's take a look at this. When it comes to the cheap versus expensive model, when I say cheap, you can get a 100K instant funding account for as low as $400 to $500. Considering an FTMO 100K challenge is over $500 and you have to take the challenge, that's incredible. It's incredibly cheap. As for the expensive model, you can get a 100K challenge for usually the lowest I've seen is about $4,500. It can go up to $5,000 for one of these accounts. But why are they so different in price? Well, first off, the cheap model, well, it's cheap for a reason. Listen, it's going to come first off with news restrictions. These news restrictions can sometimes be straightforward and easy to understand, but that is rare. Usually when it comes to these types of news restrictions, they're incredibly annoying, incredibly complicated. It could be along the lines of you can't open a trade within 2 minutes of a major news event, and you can't close a trade within 2 minutes, or sometimes it's 10 minutes. And who's to say what's a major event, what's a medium impact event? It's incredibly complicated. It's incredibly annoying as a trader to have to deal with these. And pretty much every single cheap instant funding account that I've seen offered has news restrictions, whereas the expensive account has no news restrictions. So it doesn't necessarily matter whether or not you trade the news. It just makes your life so much easier by not having to worry. And let's be real, firms that have news restrictions, it's going to be much easier for them to find a way to deny your payout by them saying, oh, there was this one news event, you didn't know what was happening, but you traded during it, therefore we are denying your payout. Number two, the cheap instant funding accounts come with lot size limits, whereas the expensive instant funding accounts typically come with no lot size limits. Now, this is an extra level of freedom that as a trader is important. For me, typically having a lot size limit isn't a deal breaker, but there can be some fluctuations in terms of the assets that you trade where it can actually become important. So let's say you're limited to 5 lots. Well, 5 lots might be plenty on, say, pound yen, but 5 lots on another pair might be nothing. This especially comes into play if you're trading equities or even some crypto pairs. It's not typically a deal breaker for me, but that is something that's important to keep in mind. For some traders, it is really important. Now, the third thing has a much larger impact. The cheap instant funding accounts typically come with a 1% max risk rule. This is a maximum risk of 1% per position. However, while that could be fine, I have seen some companies offer these accounts where if you breach this rule, it is a hard breach. It's not a soft breach, meaning they close your trade, they give you a warning, you can keep trading. If you break this rule, they will take your account away. You have failed, you have lost your deposit, you have lost your money. And to me, that is not just a red flag, it is incredibly restrictive, because what happens if you miscalculate your lot size? If you meant to risk 1% and your loss turns out to be 1.1%, well, you just lost that account. That's coming from somebody who is risk managed. I just find this rule incredibly restrictive. Whereas the more expensive accounts, there is no max risk rule. You can risk however much you want per trade. There's a lot more freedom. We've looked at these 3 differences, and some of them for you might be deal breakers: the news restrictions, the max risk rule. And for others, they might not be that much of a deal breaker. But I'm about to talk about the most important difference between these two accounts. It is, in my opinion, the rule that will single-handedly force traders or lead traders to not receiving a payout. And that is, of course, the consistency rule. We need to talk about the consistency rule because it is just detrimental. It is disastrous for traders. When it comes to the cheap instant funding accounts, we often see there is a 15 to 20% consistency rule. What does this mean? It means that no single trade can represent more than 15 or 20% of the total profit that you have made on an account. So for example, let's say you've made $1,000. That means if there's a 20% consistency rule, you can't have made more than $200 on a single trade. Right off the bat, this makes it essentially impossible for swing traders. Swing traders that rely on having outsized wins compared to their losses. That is just a deal breaker right away. But I'm not a swing trader myself, and I still find this incredibly detrimental because it means that you can't have any wins that are outsized. You can't have any outsized wins, any wins that are larger than the average, or you won't be able to request a payout. Whereas, of course, the more expensive instant funding model, there are no consistency rules. This means for swing traders, you have the freedom. If you have a large win, no problem, you can request a payout. You don't have to worry about the average size of your wins. You can just request a payout. Moving on to the next one, in terms of the daily loss limit, again, for me, I'm a risk managed trader. I think you should be a trader, not a gambler. So for me, I don't usually look at the daily loss limit because, well, if I'm risking 1% a trade or even just 1% a day, it's not a big deal. But for many of you watching, it is a big deal. And of course, it is more restrictive on the cheaper instant funding accounts, usually at 3%, whereas the more expensive ones, it is a 5% daily loss limit. So at the end of the day, what you have to pay attention to, what you have to ask yourself is, why are they cheap? They're cheap for a reason, whereas the expensive ones, they're expensive for a reason. But there's a lot more to this than what meets the eye. I don't just want to say, oh, they're restrictive, there's more freedom. I actually want to put some numbers behind it. And as I promised, I've been running a prop firm, Lark Funding, for almost 3 years now. And I can say, because of that, better than most, that there is a very big, massive reason why these are cheap. So I want to look at some behind the scenes data. When I was a trader before starting Lark Funding, I always wondered how many traders are actually passing these challenges. Well, I'm going to share that with you right now. On average, 10% of traders will pass a challenge. Now, that will fluctuate. There are months where it can be as high as 15, 20%, and there are months when it will be lower. It doesn't typically go much lower than 10%. Now, those that do pass a challenge, roughly 50% of them will go on to receive a payout. Okay, so if 100 traders pass, only 50 of those traders will actually receive a payout, and the average payout size is $2,500. Now, this fluctuates quite a bit month to month. I haven't really seen it go much lower than $2,500. We've had it go as high as $5,000. It really fluctuates based on the account sizes that people are purchasing, what's going on in the market. Here's the deal. This data right here is from challenge accounts. It's not from instant funding accounts, which means only 10% of traders are passing when there is no consistency rule, when there are no news restrictions, and the maximum drawdown is 10%. The max drawdown on these instant funding accounts is 5 to 6%. Make the challenge even harder, make the rules even more restrictive. What's going to happen? Traders are going to do even worse. So that is why I can confidently say, when it comes to the cheap model, the cheap instant funding accounts, okay, 1%, if not fewer traders are going to receive a payout. It is incredibly, incredibly restrictive, and they are cheap for a reason. Ask yourself, why are they cheap? It is because of this. Another thing that I want to mention is that 75% of failed accounts come from breaching the maximum loss limit. 25% of traders fail from hitting the daily loss limit, which is crazy. 75% of traders fail for hitting the maximum drawdown. The maximum drawdown is 10% on our two-step program, okay? So 7, 8 out of 10 traders will hit that. Imagine what it will be when you cut this in half to a 5%. So at the end of the day, when it comes to prop firms in 2025, I truly believe that these accounts, these instant funding accounts, are going to be the most popular. They're already growing in popularity, and there's nothing necessarily wrong with them. We're now offering the more expensive model at Lark Funding because we believe that it can actually empower traders. We understand that there's a lot of difficulty behind taking challenges, but if you're going to actually make money, you can't have rules that are too restrictive. You have to find an even balance between giving traders freedom, but also creating rules that are sustainable and reasonable. And we believe the only way to do that with instant funding accounts, where traders actually have a chance of earning money, is going to be with the model that is more expensive. Now, yes, it is a very large investment, especially the larger account sizes. But by having freedom, by being able to trade the way that you actually want, your odds of receiving a payout are much higher. So at this point, I would love to hear from you guys. Do you think instant funding accounts are worth it? What model do you prefer? Do you think I was too harsh on the cheap accounts? Do you think the expensive ones are overpriced? Let me know. If you made it this far, I appreciate it. And until then, I'll see you in the next one. Peace.